Good morning, everyone. Welcome to the commodities technical analysis, where we break down natural gas, gold, and silver, and we'll be taking a look at their support and resistance levels, as well as the psychology of trend changes and what's the most likely scenario that natural gas and the gold and silver is likely heading into later this week. So let's take a look at natural gas. So natural gas futures is open actually right now because futures chart open even though market is closed. So we have currently we had a bull break right above yesterday's Monday's high, and we have currently pulled back to it. So let's take a look at it. We zoom into it, and it's holding pretty well. So right now, futures are still open, and it's a good sign as long as the bulls are holding above this 2.74 level, because that was the prior support. It was prior resistance. We wanted to now act as a support. So you can see we bounced off of it a couple times in the morning here. 1, 2, 3, 4. And the bulls would need to hold this level for it to be a decent break. We want to break this above this 2.75 resistance to not get over it multiple times as well. Okay, this is the chop zone for you scalpers right now. Be battling against bears, 2.76 and 2.74 is the level right now. Whoever breaks these levels is going to get some follow through. And we also bounce off of it right here as well. That support zone. Zoom out to the daily time frame. So daily, we can see that we have tested this 2.66 and 2.62 zone, support zone, for a couple times actually, and we have held. Bulls have held it 4 times, so that's a good sign as well for the bulls, because you can see back here we're rejecting it from it multiple times, over here as well, over here as well, over here as well. And when you can see when we're above this price action, we're acting as support, and also resistance. So now the price is above this zone, so it's going to act as support. So we have bounced off of 4 times, as well as 12 EMA. You can see this teal looking line is exponential moving average. You can just type 12 into it, and you'll get the exact same line as due. And currently, it's a great guide because you can see bounce off of exactly, bounce off of exactly, bounce off of exactly. It doesn't always bounce off of exactly, but when we do see 3 bounces off exactly in the most recent price actions, then we can use it as our guide. So that's what we can do right now. And so what's the most likely scenario for it to happen for natural gas is, so let's say we continue to chop within this zone and this zone, but every time we go higher and pull back, we get a higher low. What does that higher low mean? It means the next candle low is going to be higher than the previous low of the candle. This means every time the price drops, bulls want to buy at a more expensive price. So that's just the psychology of demand and supply. So if you wanted to buy something at a more expensive price, that means there is a high demand for this thing, right? So every time we make a higher low, you can see each time it gets more expensive, but bulls buy it up. So that's a good sign, as long as don't break through below this support zone. That's a red flag for me. That happens. So let's take a look. So every time we are bouncing off higher and higher and higher, and we are also bouncing off the 12 EMA as the 12 EMA catches up. If that continues, and we probably make higher candles, and then we can retest this prior strong resistance zone where we can get over 4 times. Let's call it quadruple top. This was a bull break, lack follow through, but bulls played defense, so it's still okay. I was talking about this last week, where if we do break through that and break through this, then it's game over for the bulls for the short term at least. But we held it and bounced off of it and made a reversal candle. So now we are just in the zone again. So we're very likely going to test this 2.8 and 2.85 probably later this week. We have how many days? Wednesday, 3 more days trading for this week. And once the natural gas opens tomorrow, it's going to open wherever this future candle decides to close, because future is still trading right now, and we'll see how it breaks. So if when it opens tomorrow here, first thing I want to see is us breaking today's high. That would be 2.76. So I want us to break today's high for us to have a chance to test this 2.8 resistance zone. All right, so let's talk about the most likely scenario for bulls and bears. So I gave you guys unbiased opinion because I'm not in the stock, so I'm able to um, give you guys both bear and bull case scenarios. So you guys can, if you guys are short, you guys take a look where you guys should cover. If you guys are long, see where you guys take profits. So right now we are in a daily and weekly uptrend. So you can see we have channel changes here, and it's continuing as a daily uptrend. So as long as the trend continues, the bulls. So we don't want to be trading counter trend when most trend is in your favor, and also the weekly trend is also in favor of the bulls. You can see low of the move, pivot, higher low, bounce, and trend is continuing. A weekly time frame. But we have to be careful of the monthly time frame because monthly time frame is still a really big bear flag. You can see from the top of the move to the bottom of the move, we have not bounced over 23% yet. So essentially what a Fibonacci measurement is, from top of the move to the bottom of the move is 100%. And this little small bounce has only bounced close to not even over 23%. So this looks like 20% to me of that drop. So as long as we don't bounce over 30.82% of that drop, it's a bear flag. And so a bear flag would likely play out. You chop around, chop around, chop around, and let's say we get to here and we drop. That would be a confirmed bear flag if we drop below the prior low, which I don't think personally is that likely. We may chop around, reject, and drop a bit, but for us to drop all the way down here and break this prior low at $2, it's quite notable. Unless we get some like huge recessions later this year, because you can see how much support is down here. Support, low of the zones, low the zone as well. You can see how much support we have back here in history, because $2 is quite a low price. It goes back all the way to like 1991, right? So we do break through that. That's going to be very, very notable. And unless something really bad happens in the economy or something happen with natural gas. But other than that, I don't see as breaking to that low. But a bear flag could still potentially play out as in like not the whole pattern, but let's say we come here, come up here, reject. That's where the bears would show up if we do bounce this much. Usually that's where the bears show up, but I doubt that they can take it all the way down to $2. If that makes sense. So be cautious of the monthly charts. If that plays out, it'll probably take us into next week, next year. This candle is 1 month, so it takes a long time for it to play out. And let's see how far we are. We are 45% away from that 38.2 bounce zone, which is still quite a bit away. So not that much to worry about at the moment, but just give you guys a bigger idea of the clear picture. We don't have to play. When we play even in the short term, we want to know what the long term is doing, because if we have the long term direction and the short term direction in our favor, then the most likely scenario for our trade is going to work out. That's why we look at multiple time frames. All right. So okay. So that's the right bull side. So if the bull side keeps continuing, we are first step, break this, break that, which is this quadruple. Very first step for the bulls. And then we're heading to $3 because dollars is not a lot of resistance from 2.8 resistance to 3. There's just all price action here. One candle, climax candle here, and really here. Let's just fuss through it. We're coming down here. So it'll be quite easy for the bulls to get it up here. And I would assume bulls want to get up here because if they can't, then there's probably lacking buying volume because there's just not a lot of resistance here. Essentially, what the psychology of volume in an area is, the more cluster that the volume is, just like this cluster here, more people are gonna act as resistance and support. So let's say if we have a huge cluster here, right, looking like this, it comes up here. Bob, Sally, Joe, um, Heather Smith has waited since January 23rd, 26, to sell their position to break even, right? So that's been half a year. And once we get up here, everybody are going to sell. And we're just going to get a ton of resistance and can't get over it because a lot of people want to break even because they have waited half a year. In our case here, it's just two people. Just say it's just two people because there's a lot of volume here, right? So it'll be very easy to go up if the bulls actually buy through this breakout, right? Because there's not a lot of people selling. Same thing because we only get volume all the way back here. It should be 2021, so that's not important for me. So next level for bulls, $3.30 incoming. And then if we do break that, then we're likely heading to this zone, which is also very easy as well. I can see once we break that $3 zone, I would say we will be in a price discovery mode. Because this kind of a drop is similar to a gap fill. It's just like, you know how you see a chart and there's just a gap. That's essentially similar idea to that, because a gap just means on the daily chart, just means those volumes are traded in pre-market or after hours. And we know that pre-market and after hours has low volume, right? And much lower than when cash market opens during market hours. So essentially that's what the same idea, even though this is during market hours, but one straight move down, so where it means the volume is less thinly traded versus a cluster of volumes. So obviously we're not going to just, once we break 3, we're not just going to shoot straight up and back all the way up here, right? It'll be more of like a price discovery mode. You know how when the stock is starting to fill that gap, it will just go and go and go, and then it'll stop somewhere, and then it'll start to chop around and form a sideways zone. Then we know that's likely a strong resistance once it does its price discovery mode. If we break 3, then it's going to come up to, well, the next level of strong resistance would be 3.65 because there is somewhat of a little cluster here compared to straight move no cluster. So we'll be likely testing these levels as well before we head here. So that is far enough for the bulls. If we have a 32% gain, I'll likely take you guys should be taking profits. All right, let's take a look on the bear side. So bear side, we don't have a lot on the downside other than, let's say we take it to all-time lows. 26%, yeah, still pretty good actually. We have a lot of supports down here now after the bulls started to form structures better. Like back here, we don't have any structures, right? There's no real support or trend changes. We need to have a weekly or daily trend change here. So it's very easy to bears to just fade everything. There's not a lot of structures going on. Now, weekly and daily uptrend, and we have a better structure here. So very first step for the bears, break this 12 EMA looking line, and then break this 2.61. 62 doesn't matter, but this support zone. If you break that support zone, you're coming back into this chop zone, and you're really likely to be able to take it back down to 7. Very first starts feeding, which would coincide with this monthly forever wedge that we've been looking at. So use that as resistance right now. Prior breaking out from it, see the rejections, and so it's going to act as support if you bears do break it back down to this level. So it will likely coincide. Let's say we break it to on next Tuesday, then it would coincide with this 2.37 support. So the more support in one area, the more likely it's going to bounce. Let's say we come back to this exact spot right there, and there's a good chance that it will bounce from there. We're going to bounce all the way up there, but it can be something like this. Come down here, bounce, and we see if the bears or not. If not, bear's going to take it back down to the next level. So let's see what that's, because even this one's going to act as support, because this was prior support. So there's going to be a couple of supports down here before the bears can break it. And if we do break that, those three, we're going to likely test the all-time lows. So we'll see what the bears can do. That'll be $2. That'll be a confirmed monthly bear flag. But as of now, no signs of that yet. And let's take a look, see if that chart has broken or not. Nope, still trading within that range. So just 15 minutes ago, when we started, we were talking about this range. Still in this range. Not over here, but we still haven't gone over that yet. So zero structural change. We'll see. Yeah, I doubt it's gonna really go anywhere further than here and here because a lot of volume during futures trading. Versus you can see all these volumes here compared to this. Look how low these volumes are, right? One of this candle probably is all of these volumes. So we'll see. Decent bounce here. Yep, you can see all the support same spot, so it's good. UNG, there's no UNG is a tradable ticker for Natgas, so it's not futures, so it doesn't show up the chart. So tomorrow, if let's say Natgas closed here, UNG would be also having a green candle as well due to natural gas being up 1.22%. So UNG would probably have a candle opened right around like here, higher than yesterday by a little bit. So like around there, maybe like $7.30 roughly here. That same chart, follow the EMA 12. Most important to follow the Natgas chart, and bears want to break this 7.17, bulls want to break the 7.6. So it's the top zone for bulls and bears. Yep. Oil is just a 2x leverage on the long side. So if UNG goes up 1%, oil will go up 2%. And KOLD is the leverage on the short side. So if UNG goes down, drops 1%, then the short side would go up 1%. All right, let's take a look at gold real quick. Gold didn't do much. Still this falling wedge guide for me. Let's see this resistance and support. See all these supports, all this resistance. So getting close to the end of it. Bounce off of this black looking line here, which is the long-term support. All the way back here. Support, support, support. Bounce off of it, support twice there as well. So it's pretty close in that pivot battle zone of bear and bulls, because if bulls cannot even hold this black line, we're likely to get down to this low end of this falling wedge. So we'll see. But we're still rejecting from that 12 EMA multiple times. You can see back here, even though it's not perfectly, you can see it's just trending down on it and rejection from a lot of wicks, upper wicks. More down here. So first step for the bulls, break that EMA 12, test the upper range of this falling wedge, see if you can break out of that. And usually falling wedge are bullish patterns on the long term, especially if we have a big move up and a falling wedge, continue to break that. But this is retracement is a bit more than I liked from this move. Probably over 50% just from yeah, we are over 50%. We're close to the 61%. So let's see if we can break that wedge. Silver, same thing, but a little bit stronger. Also, almost breaking the EMA 12. Rejected yesterday, but we're starting to get over it. Silver will probably get over it first and confirm a daily uptrend if we can break this right there. Look, 30 seconds. Yep. So once we break this $23, silver is confirmed a daily uptrend. Then it will very likely test the top of this wedge resistance. For me, see if silver can lead gold, but as of now, we'll see. Silver chart is more clear, and we haven't even tested this black line yet. That's all I got for you guys, and have a great rest of you guys' weekend. Feel free to subscribe if you made it this far, and I will see you guys tomorrow for the stock market update. And you can check the video yesterday too for stock market.